Pinterest. Stock is down 10 to 12% after the company reported their latest earnings report. Now, what exactly has happened? Well, the headline says a small revenue miss and guidance is a bit weak. Like always, guidance is of extreme importance, especially at the start of the year. Now, all in all, the numbers weren't that bad. Yes, there was a slight miss. Yes, guidance is not as aggressive as the street was expecting, but there were still a lot of positive things. Positive comments from their partnership with Amazon and an announcement of a new partnership with Google. More on that later on. Now, first up, I want to start with a couple of comments here from the CEO. He says, we had a strong Q4, bookending a transformative year for Pinterest. 2023 was our most productive year yet as we accelerated our product velocity and launched more solutions than ever before. Remember, the problem at Pinterest before Bill came at the company was that they were moving just way too slow. Brands are responding by using our full suite of products to drive even better campaign performance. Pinterest is the rare business where the interest of users and advertisers are aligned. It's proven to be true as we continue to post double-digit revenue growth and have achieved an all-time high for global monthly active users. Remember, monthly active users after the pandemic was on the decline, stock got hit extremely badly, and the headlines were all, well, nobody's going to use Pinterest anymore, blah, blah, blah. Well, now, monthly active users is going up, but other metrics that weren't that interesting for the market before, we care more about that. Strange. One specific comment I thought was very interesting was about Gen Z. So they say here that about more than 40% of the user base now is from Gen Z. That means they can attract the next generation of users and grow with them. Now, there is one thing that I did not like from Pinterest, and that's the fact that share-based compensation for 2023 was $647.8 million. Quite a big increase from the year before that. Now you might say, okay, but they're buying back more shares, right? Well, yes, but if you look at repurchases of Class A common stock, only 500,000. So you're telling me that even with a share buyback program, share-based compensation is still bigger and you're still diluting shareholders. It just doesn't make any sense. Anyways, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So revenue grew 12% year over year, another double-digit quarter growth here, quite nice. Europe is up 32%, rest of the world up 27% year over year. Of course, monetization-wise, not the same as in the United States, more on that a bit later on. With regards to monthly active users, huge increase again from the rest of the world. Globally, it's up 11%, close to 500 million monthly active users. And here's the big focus from now on. Well, bigger than before, shall I say. Average revenue per user. Globally, it increased just 2%. US increased 6%, so that trend here continues. That's nice. But Europe and rest of the world are basically stagnating. Yes, there was a nice little bump with regards to Europe, up 23% year over year. But if you look at the difference between Europe and the United States, it is quite big. If you look at platforms like Meta, for example, Europe and United States, yes, there is a difference, but not as big as this one right here. Then with regards to non-GAAP costs and expenses, cost of revenue went down 2% year over year, R&D is down 3% year over year, sales and marketing down 18% year over year, and G&A is down 14%. So of course, all of that cost cutting, you've got an increase here in adjusted EBITDA and adjusted EBITDA margin, and as well with net income, quite a huge increase thanks to cost cuts, thanks to also better conversion, better impressions on the platform. Now, switching back to the earnings call, more specifically talking about the new partnership with Google. So they're pleased to announce their next third-party ad integration with Google, of course the one with Amazon working quite well. This partnership will focus on monetizing several of our currently unmonetized international markets by enabling ads to be served on Pinterest via Google's ad manager. We went live a couple of weeks ago and this is starting to ramp. Third-party ad demand is scaling as we anticipated, and while it was not a significant revenue contributor in Q4, we are now seeing it contribute more meaningfully to our growth this quarter, and we expect that to continue going forward. Of course, this is great to hear because as we've seen, ARPU for Europe and rest of the world, extremely low. Then with regards to ad impressions in Q4, this was composed of ad load and total impressions, including both organic and paid impressions, accelerated to 33% growth, driven by both increases in total impressions and increases in ad load. This marks the 6th quarter in a row where they've been able to grow both total impressions and ad load, demonstrating that ads can grow in tandem with engagement, especially when those ads are relevant to users. And now with an increase of monthly active users, right, reaching close to 500 million monthly active users, an increase of that, an increase of partnership for third-party ads, increase in impressions, increase in engagement. I mean, you see where I'm going with this. The results should follow. If they don't follow, then there is a problem here. But right now, as you will see, the outlook, although it might be a bit weaker than what the market was expecting, still quite good. So in Q1, they expect revenue to be in the range of $690 to $705 million. Market was expecting around $702 million. But look at this, it represents 15 to 17% year-over-year growth and a meaningful acceleration from the Q4 revenue growth. So how did they reach that guidance? Well, first, they're in the midst of an adoption curve of their lower funnel advertising products. In 2023, many of our largest and most sophisticated advertisers took advantage of lower funnel ads products like mobile deep linking, shopping ads, or API for conversions. These advertisers have seen sustained performance gains with this format and are growing their budget with us, the benefits of which we've seen throughout the course of the year and accelerating into Q1, which is off to a strong start. The second point here is direct links. They launched this in Q3 and Q4. And they believe the value capture from direct links will come over the course of 2024. The last one here, in Q1 revenue guidance, that includes an emerging contribution from third-party ad demand. So definitely some good traction with regards to their partnerships with Amazon and Google, and I expect that to continue in the future. Remember, a couple of days before this announcement was made, an analyst was already talking about that. Stock went up, I believe, over $40. Got some good momentum, then a small revenue miss and a weakish guidance brought the stock back down 10 to 12%. Last thing here is a good question from Ross. So everybody can see that the ARPU gap between Europe and the United States for you guys is about twice as big as Meta. So can you talk about, I guess, the difference between Google partnership and what you have going with Amazon right now? So Bill answers here. As we've talked about on the international front, we see Pinterest significantly under-monetized across the board. But the most under-monetized internationally, we have approximately 80% of our users outside the United States, but only 20% of our revenue. So as we shared during the Investor Day, we think that's a meaningful opportunity for us to increase that ARPU internationally. Of course, remains to be seen when that happens, because it's nice to talk about numbers, projections, partnerships, but they need to make it work. It's true, 80% of their users is outside the United States, yet only 20% of revenue. I mean, if they are successful, we should be seeing a positive impact in the numbers quite quickly. The last thing here, if we look at the graph, of course, on the weekly, big red candle because of that earnings report. Beforehand, we were actually a bit overbought. We've got some good momentum out of 2023. I mean, late October, we're at around $25. Before the earnings report, we're at $40. So yeah, definitely good momentum with the stock, a bit overbought, slight miss in revenue, weakish guidance, big red candle, but it does seem to be holding up above that 50-day moving average because surprisingly, not that many analysts were that negative after the earnings report and the earnings call. I've seen way more price target raises than cuts, which is usually a good thing. Now overall, you might think that Pinterest, it might not be looking like an interesting investment right now. Could very well be. I still hold my small portion of shares in my portfolio, but I do think that if the momentum continues with Amazon, if the partnership with Google becomes meaningful, meaning the international users get monetized way better, I do think we can see a huge bump in the coming quarters. I don't know if we're going to see this already in Q1, but 2024, maybe if things are successful, if they are executing correctly, I do think that bump can become pretty big very, very fast. And so that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.